please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Chinese people will continue to increase openness and expand the cooperation.
The markets are starting at 10,413 and the Sensex at 10,890.
The non-NBFC finance sector should be something which is worth looking at.
For 2,500 megawatt aggregation we are trying to do as a pilot to see whether in medium term this can bring in some PPAs.
The highs of the day were made early in the trade in the first hour of market opening. After that, it's been not weak, but almost looking like at any point it's going to start to give way.
We are very close to important resistance, but if it was such a big resistance, you would have seen some cool off. I think April looks like a good series for the market because you're building on, you still have a lot of shorts in the system. So for now, it looks like this could be one of those meaningful series.
Dalal Street trades on a tight leash. The Nifty reclaims 10,400. Sensex gains nearly 100. The up move is capped by 1% loss in the HDFC twins.
Asian markets bounce back after China's President Xi Jinping pledges to proceed with measures that will further open up the country's economy. Shares in Shanghai, Hong Kong and Tokyo all end in the green.
Bank stocks outperform marginally, led by Axis and ICICI Bank from the front. Both banks recouped some of their recent losses incurred due to various controversies in their corner offices.
Metal stocks shine in trade. The index closes over 2% higher, led by Hindalco and Nalco. Gains as LME aluminum prices, the underlying prices, soared after the United States levied its harshest sanctions against Russia.
Power Secretary tells CNBC TV18 that the entire 35,000 megawatts of stressed power loans will not go to NCLT, promises that the government is actively engaging with the stakeholders to resolve bad loan concerns. That's an exclusive. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talk Back, the show where we tell you about every bit of the 8 hours of trading in just 5 headlines. I'm Lata Venkatesh. With me, my colleague Prashant Nair. Hi, Prashant.
Hi, Lata. So failed to fire, it looked like it would fire at one point. Oh, yeah, absolutely. Nothing really happened. 20 points off the high, 20 points off the low on the Nifty, somewhere in the middle. So middling kind of market. Over the next 30 minutes, we will discuss, the market through the top 5 stories that we've got for you. Our experts will answer your questions. And we've got, to answer the questions, technical expert Mitesh Thakkar, who is with us on the show. Mitesh, we're going to come to you in just a bit, but before we do that, let's quickly take a look at what really happened as far as markets are concerned. As you said, Lata, early in the morning we got a big trigger, but then I guess I didn't really capitalize on it. Not just here, markets here, but markets around the world.
Yes, I guess follow through. But first things first, Xi Jinping, the Chinese premier, announced in an early morning speech for us that he's ready to lower tariffs in China, and that he's also going to put in a regime that will protect intellectual property rights. The 2 major complaints that President Trump had with China. We did see markets that were lackluster jumping into the green in early morning trade, but as Prashant is saying, that was not enough to really fire up. Markets didn't fire up despite the fact that metals were fired up by partly the Xi Jinping effect and partly because of American sanctions against Russia. They didn't fire up despite the fact that Axis and ICICI did very well. So clearly what we have to understand is that this rally, which started from 10,000 all the way to 10,400, is facing its first real resistance. Will it be able to cross this is an answer that we will seek from our experts. But before we just come to them, anything stock specific? Prashant, you want to point out?
A couple of things. So let's just start with the sectors which did well. I think metals, we pointed out 2% gains. So that stood out. Infrastructure and real estate, hand in hand. Those indices were up almost 1%. And then the PSU bank index and the private bank index did quite well as well. And as a result, the bank Nifty didn't do all that badly. Stocks, Axis and ICICI, have to begin there. Basically, Axis closing pretty much at the day's high. ICICI Bank had sold off by the time the markets closed. Hindalco was up 4%. Tata Steel was up strong. You know, something like a Nalco was up strongly, but the big ones were Hindalco and Nalco. Adani Ports, Adani Power, those stocks did well. You had Coal India, L&T, ONGC, which were some of the other large index gainers. The one index which was down 1% was the auto space. So 3 names there, Hero, Tata Motors and Mahindra lost between 1 and 2.5%. Come to the broader markets in terms of gainers. Advance decline was still sort of in favor of advances by the time we shut shop, not hugely, but in favor. Balrampur Chini, Dwarikesh, KCP, some sugar stocks. You had something like a Ramco, which put on big gains. Manappuram Finance. We had Fortis Healthcare, which was strong. DMart, DLF, Praj Industries, IIFL, Thermax. We were talking about industrials and how maybe this quarter is going to be good for the industrial pack. Broader weakness, Lemon Tree had a big blowout move on day one. Listing day yesterday, it gave back almost 7% today. MGL, Mahanagar Gas and Godrej Agrovet were the other losers. But again, there weren't any marquee stocks which were dropping, you know, big time. They were in the 3 to 5% losses category.
All right, let me straight away take this to Mitesh. Mitesh, 10,400, will that be a formidable resistance?
Good evening, Lata. I think we've been highlighting this 10,400, 430 zone is an area where a lot of moving averages kind of converge. So it might take a couple of days to get past that. I think I was looking at about 1 to 3 to 4 days kind of consolidation. But if we start getting past 10,430, that should suggest that this upward rally should extend, and that is possibly the indicator setup also suggesting that the upward rally should extend. So maybe after 1 to about 3 days of consolidation, we might see a breakout, and once that happens, I think we would look at targets of 10,540. Eventually 10,600, 620 could be tested as well.
Okay. Well, I think with that, we will come to the second headline of the day, and that's global. Asian markets bounced right back after Chinese President Xi Jinping pledged to proceed with measures that will further open up the Chinese economy. Both Shanghai and Hang Seng indices were up over 1.5%, while Nikkei closed the day up over 0.5%. First, let's listen into what the Chinese president had to say, and we're going to be back with a guest to parse what he's trying to say.
China will continue to adhere to its fundamental national policy of opening up and pursue development with its door wide open. I wish to make it clear to you all that China's door of opening up will not be closed and will only open even wider. Manufacturing. We have basically opened up this sector, only with a small number of exceptions on automobiles, ships, and aircraft. Now, these industries are in a position to open up. Going forward, we will ease as soon as possible foreign equity restrictions in these industries, automobiles in particular.
Okay, so to allow more manufacturing, and of course the president went on to say, the premier went on to say that intellectual property rights also will be protected. Does this mean calling a truce to an incipient trade war? That's the question we are asking, and joining us to answer that is Manish Singh of Crossbridge Capital. Welcome, Manish, to the show. That's the question. Do you think now we are going to hear more peace noises, and whatever markets lost for fear of a trade war, it will win back?
So Lata, I have been on record saying that I don't see there is a trade war going to happen. And to me, this speech was very much a Davos 2017 redux in the sense of what Xi Jinping said there, is that he is portraying China as a globalist and free trader compared to what is happening with the U.S. and every other market. So I think it's a continuation in the same vein. Also, why I have said before as well that I don't see a trade war happening is for two reasons: that U.S. and China are heavily reliant on each other. The things that China manufacture cannot be manufactured at the same price. It will need a far higher price and environmental restrictions and a lot of things that U.S. will have to deal with. And second, I strongly believe that China is going to open up its market, and they have done that in insurance. And as President Xi indicated last night, is that they're going to do the same on cars and other products as well. So I think that there's a strong willingness on the side of China not to enter into a trade war. And I think U.S. realizes that a lot of things that is being manufactured in China is not necessarily going to be manufactured cheaper, but they want to use this as a negotiation tag to get China to relax and take in more imports from the U.S. And from what we have heard so far, both seem to be moving in the same direction.
Manish, so you're saying we won't have a trade war, but if we are in this limbo and markets believe that we may end up having one, it will impact what happens to markets. So my question is the worst, even in terms of the noise behind trade tensions, etc.?
I mean, I would say it's difficult to say if the worst in terms of noise is behind. I mean, you may have few people speaking out of turn again. But what I'm trying to say is that so far what we have heard, and also whenever you see President Trump tweets about trade war, I mean, even the day before, one of his tweets was, whatever happens in trade, but President Xi and I will be good friends and we will deal with it well. So that is not the sound, or that is not the mentality of a trade warrior from what I see. And U.S. realizes this is not 1980. It is not what U.S. did to Japan and got them to accept tariffs and various restrictions, because then Japan needed U.S. because they were afraid of China's growth and various things. And Japan was and is the U.S. protectorate. So things are very, very different. And also remember what did Japan do? They managed to open factories in U.S. and started manufacturing. But U.S. does not want that either, because U.S. thinks that China will take intellectual property, and so they are stalling a lot of business that China wants to buy and genuinely invest in the U.S. So I don't think it's quite in favor of U.S. to really, have a trade war or put tariffs, because it doesn't help U.S. Yeah.
Yeah, no, I take your point. I mean, the Plaza Accord, the one that you're referring to, really destroyed Japan and to some extent even Germany. But Manish, at the moment, what will you buy therefore? Are you going to buy US stocks because doors are opening for that economy? Are you buying EMs? Where's India in your scheme of things?
So I would say that I haven't, over the last 1 month, despite whatever is happening in the market, I haven't changed my allocation at all. I'm still overweight US. I have still decent holding in emerging markets, which I haven't sold, and I don't intend to sell. If anything, I have just reduced my European exposure over the last 1 month, because I do think that, Eurozone or European markets are not going to do as well. Now, so global growth to me is still on track for 2.5–3%. The trade war seems to be going okay for now, at least. And then what is remaining is what happens in Syria, which again seems to be more a localized issue and will have an impact on oil. So unless I see really a growth fear, which could have come from trade war because people start basically buying things and that starts hitting consumption, and we don't see now, it doesn't change my allocation. So I'm still positive on emerging market and overweight US.
All right. Thank you very much for joining us, Manish Singh. Overweight EM and believes that the global economy can grow by well over 3%. We will take a break on that note, but do stay tuned. We have lots more headlines from the markets and questions that our experts will answer.
Welcome back. You're with us here on Markets Today Talk Back. The Nifty ending higher, but nothing large or spectacular. 20 points off the high and about 20 off the lows. We've been answering your questions. We have Mitesh Thakkar and Prakash Diwan who are with us, our guests, who will help us get through the queries that you sent to us. We got through 2 headlines, so let's get to the third one. And this is banks and private banks. So bank stocks outperformed marginally. The uptick was led by Axis Bank and ICICI Bank. For Axis Bank, both banks recouped some of the losses incurred in the last few days due to controversies in their respective corner offices. Lata, with Axis, there is some finality now, right? I mean, in terms of how this is going.
Yeah, I would think that end of uncertainty to some extent, as well, the market rightly or wrongly pinning the blame for the asset quality problems or whatever, even regulatory run-ins on Shikha Sharma, and the fact that now if there is a change in headship, a new person could mean a new beginning. So it is being taken very positively, and it's now almost becoming endemic that because there is a change in one bank, there is going to be a change of leadership in another bank, where of course, there are even more serious accusations of conflict of interest. So ICICI was moving almost in step with Axis, and for the same reason that a new head will mean probably a new beginning. But on that note, questions?
So we've got Twitter user Tanmaya Sharma who's written in, who has 1.7 lakh shares of ICICI Bank. Okay, at 350 rupees, and wants to ask what should he do. So that's a very large position. Any thoughts?
Nitish, I think.
Mitesh, any thoughts?
Yeah. So at least last few days, you know, the trend appears to have at least on the short-term basis turned positive. My sense is that I think the stock has bounced back from very strong support levels of 260, 255. I don't think that will be broken. So in that sense, the downside which is already seen, I think should be the worst of it. Once it, you know, kind of bounces back to about levels of 315, 320, you might see the stock take time, breather and consolidate. But yes, there's a good chance that if he continues to hold on to the position for the next few months, I would say about 2 to 3 to 4 months, I think the stock should be heading back towards its price, maybe even higher than that. So in that sense, I'm quite positive. I think the worst part is over. You've had a bounce back from the support levels. Now some consolidation could happen around levels of 300, and then we should see upward trend resume.
Okay, but nevertheless, I admire the nerve of some people to be able to sit on 75 lakh and, 1 crore worth of losses. That's the kind of losses the gentleman is sitting on. Okay, let's get to the fourth headline of the day. Metal stocks were in focus. The index closed over 2% in the green. This rally was led by the likes of Hindalco, Nalco and Tata Steel, which were all up around 3%. Hindalco gained as LME aluminium soars after United States levies its harshest ever sanctions against Russia. Nigel, if you can quickly decode that for us.
So that's right, aluminium prices have spiked up by nearly around 5 to around 7% in the last couple of trading sessions on the back of news that the United States of America has imposed sanctions on Russia, which in turn would impact Russian-based aluminium company Rusal. Why is that important? Because Rusal accounts for nearly around 6% of the global aluminium supply. Now, importantly, Edelweiss believes that this could have a bit of a supply disruption, which will support prices, in addition to already the input costs like alumina prices spiking up. They also have a buy rating on Hindalco. They say that, in fact, the standalone operations will definitely benefit. And they also add that maybe Novelis in the near term will have some margin impact because of the sharp spike we have seen in aluminium costs. Credit Suisse says on an EV upon a beta basis, when Hindalco is trading at near 5 to around 6-year lows, that's why they continue to be bullish on the stock.
Okay, aluminum essentially a top-forming sector. Twitter user Om Prakash Mittal is holding 501 shares of Hindalco. His purchase price is 75 rupees a share, and he's been holding with them for the last 2 years. He's a long-term investor, wants to know should he hold or add or book profits. I mean, he's sitting on large gains. Price is 200 plus. Prakash, what would you tell him?
So I think, Prashant, the position seems to be designed for the long term in mind, and I think there's no reason to change that view. In fact, the potential for Hindalco to outperform the rest of the metal pack, particularly in the non-ferrous side, continues to go up. And then at some stage, I can only suggest that once he books out, let's say 30-50% of his holding, he could probably start looking at buying into Hindustan Zinc to, just diversify the overall portfolio. But otherwise, there's nothing wrong with Hindalco at this point in time. You can continue holding and enjoy that momentum.
Fair enough. But we've got one more metal stock question. This question is on Tata Steel. Alpesh has written to us saying he holds 250 shares of Tata Steel, which he purchased at 400 rupees, holding it since, for the past 15 months. He's a long-term investor. Should he hold further or sell? Well, that's long-term investor, Prakash, your question.
So, there's a very interesting opportunity in Tata Steel that I've been discerning for the last few weeks, post the rights issue, post the stock getting X rights. So there's this partly paid share where the call would be to, the company would call for money, and it's offering at 650 rupees in the next 15 months. Now, that's an interesting way to take on Tata Steel in the long term. What you could do is Alpesh could probably book out of the base stock that he has, which he's bought at 400. So it's anyways 50% higher than his acquisition cost, and use that money to buy into the partly paid stock, which is about 155, 158. I'm not sure what it closed at, but it's that range. And then that gives him an option to buy the rest of pay for the rest of the amount and buy those many shares. So, it's a very nice way to kind of look at the stock from a longer term perspective, and a special situation of sorts, but very clearly with a very defined level of entry point and acquisition cost. So that's what you could probably look at doing straight away.
Okay, that is interesting advice. So Tata Steel, the final headline today, power stocks continue their up move in trade. They've been the big monthly gainers as well. This as there has been an increase in power rates. Also, the power secretary in an exclusive conversation told CNBC TV18 that the entire 35,000 megawatt of stressed assets will not go to NCLT since the government is actively engaging with stakeholders to resolve the problems in the sector.
State governments have excess PPAs already in their kitty, and some of the state government discoms had surrendered the PPAs to us at times, saying that we don't want this coal. The trend is reversing. We are now request from the state governments to get back their quota which was allotted earlier and start getting power. Already, I mean, our DVC and NTPC are getting these PPAs signed.
Okay. With that question, sir, this has been tweeted to us by AR. He has 50 shares of Tata Power purchased at 86 rupees. Should he hold it for 6 months? Mitesh?
Yeah, I would believe so, Lata. I think, not for 6 months, but maybe lesser than that. But the stock is now showing signs of sideways trend, broadly between 80 to 75 on the lower side to roughly about close to about 9,700 on the upside. Try to book it around the upper end if you have that very small kind of horizon, and try to buy it back once it's close to about 75-80 zones.
Sangram Keshari has been holding 60 shares of Torrent Power at 215 rupees. Price is about 250 now. He's been holding it for the last 6 months. He's a long-term investor. Should he hold or sell? Prakash, you want to take this?
Oh, yeah, sure. So, I mean, one of most balanced kind of a portfolio that this company has within the power sector. It's got production, it's got distribution, and I think all the parts of the businesses are running pretty well. Given the fact that gas supplies are only going to ease up in the future, it's going to be very positive for the company. And the distribution setups that they acquired in the last couple of years have also started getting into an operating leverage stage. So very positive on Torrent Power. I definitely would recommend this to be a long-term pick in his portfolio.
Gentlemen, with that, we have to call it curtains on Markets Today Talkback. Thank you very much, Prakash and Mitesh, and all of you for watching this show.